So in this video, we're going to talk about how to calculate tax credit. There are tons of different tax credits could apply to your tax return. The purpose of tax credit is used to deduct your taxable income, which will make you pay less income taxes at the end of the year. So it's very important to understand what kind of tax credits can apply to your income taxes, because everybody has a very different situations. Okay, so if you have eligible dependent, if the eligible dependent is infirmed, has a mental disease, so you could claim caregiver amount credit. Or if you are students, so you can claim for a tuition fee credit. If you're first-time home buyer, you can apply for the first home buyer credit. So there are all sort of different tax credits can apply to different situations. Now we are going to mention some very basic tax credit. The first one we want to talk about is the basic personal amount. This is the amount that all resident Canadian individuals can apply. So this basic amount for 2021 is $12,421. So everybody will apply this basic personal amount times 15%, of course, is for credit. Now, there's also additional amount of $1,387 of basic personal amount, which you're using the $13,808 deduct $12,421. $13,808 was indicated by the government. What's the rule is the government proposal will see that the $12,421 as a base amount eventually will go to $15,000. However, this increase will be in the 4-year base, which will not reach in the level until 2023. So for 2021, the base amount will be go through $13,808. So this is subject to an income threshold. We'll give examples, we'll have a better understanding. Now, when we do the calculation, we know that the basic personal amount is $12,421. The extra amount will start to be eliminated when an individual's net income for tax purpose, which is talk about net income, reaches the third tax bracket. So the third tax bracket will be $151,978. So it's going to be decreasing processing depends on your net income. When you actually achieve the top tax bracket, see if your totally net income for tax purpose is $216,511 at the end of the year, then your basic personal amount is only for the basic amount is $12,421. You will not get any extra amount. Okay, so we'll see examples on that as well. Now the prorated reduction of $1,387, if net income is between $261,511, that is the top bracket, and $151,978, that is the third bracket. So the differences will be $64,533 and prorated reduction of $1,387. We will introduce a very simple formulas to do the calculation. So the calculation was as follows. We have our $13,808 was introduced by the government. Deduct the differences, right? The prorated reductions, $1,387 times the lesser of individual's net income and $216,511. So which one is lesser, your net income or the top bracket? Deduct the third bracket's amount, $151,978. Then you use this differences times 1,387, and then you divide by 64,533. So that will be your total BPA for 2021. So this formula reflects the approach, which starts with the regular BPA and adds the enhancement and subtract any reduction in enhancement. It can be very simplified that you just simply use the $30,808 and then deduct whatever the difference is, divide by 64,533 and then times the 1387. So this is the amount to reduce the gross federal tax payable by using this BPA times 15%. So for examples, we will have a very simple calculations. Now we are assuming your individual's net income equals your third bracket, so equals $151,978. So comparing this third bracket and the top bracket, you're gonna use the $151,978, deduct the third bracket, which is 0. So what is your BPA? Your BPA will be 13,808, right? So that is the first statement, that you have your actual amount, right? The basic amount is 12,421. So you have your actual amount if your income equals to the third bracket's amount. So that is how this formulas work. Now, if you're higher than the top bracket, you will see that it doesn't make any increase. So you just simply use your BPA is the base amount with 12,421. Now we move on to the personal tax credit. We'll talk about spouse or common law partner credit. Spouse or common law partners, we have a very simple defined those sentence. Either you two are living together for 12 months with no children, or you two have children, and even though you're not living together, you're still defined as common law if you're not in a situation of separation or not in a situation of divorce. Okay, so that's still as common law partner or common law partnership. Now, how are we going to calculate individuals with a spouse or a common law partner? Simply, for individuals, we just, for the individuals, this credit, we just need simply 15% of the BPA as we just showed the formulas from the last slides. And for a spouse, under the Income Tax Act 118(1)(a), if the person is healthy, just simply use 15% times the BPA, deduct the net income of the spouse. If the person is infirmed, so mentally or physically impaired, we'll use 15% times the BPA plus $2,295. Pay attention to the number because you have to memorize it when you do your taxes. So plus the $2,295 and deduct the net income of spouse. So assuming that if the person spouse has net income of $100,000, and what you need to do the calculation is you simply use the bracket. We have our BPA if it's health. Okay, so if the person is health, we simply use the BPA and then deduct the net income $100,000 and then times 15%. We are going to show examples in our tax book. They always give you a different description if the person is infirmed or not. Okay, now we usually claim by supporting spouse if married or living common law in a year, not claimed if the deducting amount paid for spouse support or for more than one spouse or common law partner. Okay, so in general, it's not allowed a tax credit based on the spouse amount in situation where is making a spouse support. That is under a law. So we have to remember that if it's for making a deduction for the support of a spouse or common law partners, in the year of separation or divorce, individual can choose to deduct the amount paid for spouse support or claim the tax credit for a spouse, but not for the both. Okay, so either claim the spouse support amount or either claim the tax credit. Now, the conditions to claim tax credit. Individuals is single. Now, in order to eligible for supporting a eligible dependent, this is you have to the dependent person has to be under 18 years old or mentally, physically infirm or individual's parents or grandparent, living with the individuals unless the child away at school, related by blood, marriage, common law partnership, or adoptions, residents of Canada. But there's exemptions if the children, could not live in Canada, but you could also are eligible to claim the tax credit. Amount for eligible dependent. For individual, very simple, the same way, calculation 15% times the BPA. Eligible dependent, if it's not infirm, we use 15% times BPA, deduct net income of eligible dependent. Eligible dependent, infirmed, and not under 18, so it's adult, right? So eligible dependent, infirm, and is adult. The calculation we use is 15% times the BPA plus there's 2,295 amount for infirmed person, deduct the net income of eligible dependent. So we can only limit it to one dependent. And additional amount of 2,295 is available to an infirm child who is under 18, so it's not adult. There is extra amount, but it's not in here is in a different ITA provision. Now that is the basically for eligible dependent. Next, we're going to talk about a caregiver. But before we move on, we have to pay attention to the eligible dependent because you have to make sure if it's qualified for this credit, right? So in order to qualify to claim the eligible dependent, the individual taxpayers must be unmarried, not living in a common law partner, or this person married and has a common law partner, but they didn't live together and this person didn't pay any support for the spouse or common law partner. So very careful, because I can give examples. I used to have a client. He's single, he has a girlfriend, but they didn't live together. And his dad lived with him. And basically he has to providing any necessaries, such as food, shelters, clothing, or financial support. So he can claim his dad as eligible dependent. Okay. But if he's married, then or he's living with partnership, even though the dad is still living with them, he could not claim as eligible dependent. Okay, so different situations. Now we move on to the caregiver amount for child. Caregiver amount for child is mentally or physically impaired. Infirm child live with both parents or with single person who claims or could have claimed eligible dependent credit. Of course, it's under age 18 at end of the year. We just simply use 15% times the base credit amount, $2,295. So that is caregiver base amount, $2,295. So the credit will be $341 can claim for caregiver amount. Just make sure that if you're eligible to claim, right? Now the next part is single persons, straightforward, 50% times the BPA. So this is examples. We have Jason, 35 years old, single, net income is 150,473. So it's lower than the third bracket, and is not involved in a relationship with a common law partner and no child. So Jason can claim a credit against the tax payable by using 15% times, because it's lower than the third bracket. So he can claim that extra amount, $13,808, right? So 15% times $13,808. Then that is how you calculate. Simple, very easy, straightforward for a single person. Now for Canada Caregiver, that's a little bit tricky part. Before a few years ago, that the federal government actually released 3 separate tax credit for caregiver amount related, like the family caregiver credit or caregiver credit, or infant dependent over 17 years old credit. So there are all sort of different Canada Caregiver dependent credit. Yeah. But after a few years later, so that was from 2017, I believe. And then after a few years, they just decided to combine all together, just give a Canada Caregiver. So one of the most important parts to make sure if you're eligible to claim. Available to individual who supports a mentally or physically infirm individual, eligible dependent, who is either a spouse or common law partner. A dependent is 18 years old or older, so it's adult, and child or grandchild individual or of individual spouse, parent, grandparent, brother, sister, uncle, aunt, niece, nephew of individuals or of individual spouse. So that is the eligibility to claim the Canada Caregiver. Mental or physical infirmity, we do not have a defined under the Income Tax Act. So we ordinarily just meaning like normal meaning, right? Physical or mental weakness. CRA defines that the degree of infirmity expected to last for a considerable period of time. So as there's no specific definitions for how to define the mental or physical infirmity, it just depends on the normal situations. Now, how are you going to calculate the amount? The formulas just simply follows as 15% times 7,348. This 7,348 is the base amount for the caregiver credit for 2021. So we use this 7,348, deduct any eligible individual's net income, and deduct the 70,256 was given by the government. So whenever you're going to calculate the caregiver amount, you use this formula to do the calculation. Now we're supposed, there's examples from our textbook. It says Jake spouse has a mental infirmity. Her 2021 net income for tax purpose is $21,785. Now the credit will calculate it as 15%, of course, times the 7,348, deduct our total income 21,785, and then deduct 70,256. So that is the calculation for simple caregiver credit calculation. We're going to show examples as well. There are also some additional rules. Canada Caregiver credit can be claimed for more than one eligible individuals, but they have to share. So if both person will claim one individual's caregiver credit, they have to share the credit. No claim if the individual required to pay support for that person to current or former spouse. Infirm independent not required to live in caregiver's home, but must be reside of residents of Canada. So children or grandchildren excluded. Now, for this situations, for those rules, one of the most important things we have to keep in mind that if the person claimed the caregiver credit, then they cannot claim for eligible dependent with additional amount for infirmity. So for example, if the person is only 9 years old, and then there's no income, of course. Now, how are you going to determine the tax credit? The child caregiver amount, because the person is only 9 years old, so it's under 18. So we simply use the base amount is at 2273, and then times 15%. Now for eligible dependent, we know that when you calculate the eligible dependent, you can use that base amount plus 2295, right? But because you're going to claim the caregiver amount, the 2295, it cannot be included to calculate the eligible dependent. You know what I mean? So the child caregiver amount will be 2295 times 15%, and then plus eligible dependent amount without adding that 2295. So that is the basic of the rules. I think the next slide will be the examples. There's another additional amount. If individual entitled spouse or eligible dependent credit for that person not permit to claim that person for Canada Caregiver credit unless the 1E applied. So the 11(1)(e) provides additional amount of credit in those situations where the claim for the spouse or eligible dependent amount is less than the Canada Caregiver amount. This additional amount is equal to the excess of the Canada Giver amount for the spouse or eligible dependent and basic spouse or eligible dependent credit. So you see that based on for spouse or eligible dependent credits and less than the Canada Caregiver credit, we'll see the examples. It will have a better understanding. So examples, the spouse is infirmed with income of $18,163. Regular spouse tax credit base, we use 13,808, that is the BPA for 2021, plus 2,295, that is the infirmed for spouse credit, right? And then deduct net income. So net income, that is a nil. There is nothing for regular spouse tax credit. Now we're going to move on to Canada Caregiver tax credit base. We use 7,348, deduct the differences between the income of 18,163 and 17,256. So that's the differences, and use the 7,348 to deduct the differences. You have your caregiver tax credit base is 6,441. Then your additional amount is 6,441. That's how are you calculate for additional amount. So that is for Canada Caregiver credit. If you want, please do some exercises in your textbook to have a better understanding of the rules.